Hello traders everywhere, Adam Hewison here, president of INO.com and co-creator of MarketClub with your video market update for Thursday, the 21st of February. Well, let's slap on an Apple and let's plug in a Tesla. We'll be looking at both those stocks today. We'll also be looking at Walmart, but we'll also be looking at some other things as well, like our major stocks, like the indices, crude oil, gold, and the Forex markets that we normally look at. But let me just draw your attention to something brand new on the members page. This just went up yesterday. If you haven't seen it, it's very worthwhile looking at. And this right here, this little section right here. And what this is a driven top stocks to our using our trade triangles that shows you exactly what they are. So let me just click on the top one and show you. So let's just clear that off and bingo. So what this does, it brings up a list of top stocks. Well, there's Wells Fargo, plus 100. These are all plus 100, plus 90. That's a new one today. That's Net Spend Holding, looks like. Have I got this right? No, Public Service Enterprise, 3185. That's a new signal right there. Today it's a new signal here. Daily, weekly, and signals. These are all happening today. These are incredibly valuable as a member, and we post them all every day. So this is for the 21st of February right here, Thursday. And if you're a Market Club member, you have full access to these every day, of course. And also, if you go back to our home page, and we'll just go back here, like that, and you'll see that we have not just the top stocks, but also we have top penny stocks, top ETFs, and top Forex. So it doesn't matter if you're a Forex trader, or you're a stock trader, an ETF trader, or even if you like penny stocks, we have every day a list for you. So you can just click on here and I'll show you exactly what they are. So let's get started right away. Let's go to our portfolio manager and look to see what we're looking at today. Let's start with the S&P 500, which took a little bit of a tumble yesterday. And as you can see, our daily triangle went into a negative mode at 1514, currently trading at 1500. We traded just below there just a few minutes ago, 14.99. But really the key level there is we're getting close to it, so I want to pay close attention. But let's look at the chart right now and see what comes up. So here we are. You've seen the pullback. You've gone below the parabolic. You were at the top of the Donchian trade channel, but we have been for quite some time. And we're seeing that pullback that everyone was looking for. But having said that, let's just put our trade triangles in. We are still in a bull market, even though we've had the pullback. 1470 was the start of the bull market for us, and I think this pullback is going to be a healthy one, and I think it's an opportunity to probably be a buyer. Now, the key thing is if we go below the 1495 level, that will change something. That'll change our triangle, our green triangle at 1495 will change to red, indicating that perhaps at that point in time you should be on the sidelines if you're an intermediate term trader. If you're a long-term trader, stay long. So let's just go back to the Dow. Not pretty much the same in the Dow. However, the Dow is given a red triangle on the weekly, indicating a sidelines position for intermediate term traders. If you're a long-term trader, you can see the situation here, 13661, still intact. But it's come back down to an area where it should probably begin to find support around the 1380, 1375 level, somewhere around there. That's the lower end of the Donchian trade channel. And every time we've gotten down there, you can see right here and right here, the market's popped up. So I would imagine we're going to see much the same scenario with this current pullback. On the Nasdaq, we are still in a bull market there. Actually, this must have just turned today. So let's yep, there it is. Just kicked in today at 3,130. That made a turn, but we are at the bottom of the Donchian trade channel. That should give some support. We are oversold. So I would look at this market very carefully. But remember, these markets can go down pretty quickly, and you should, unless you're a long-term trader, you want to be probably out of this market for the time being. Just let the market do what it wants to do. So moving along to crude oil. Crude oil's had a big drop. Now you see our weekly kicked in yesterday at 95.50. You can't underestimate these triangles because they really do get you in and out of the market at the best times. Now this turned the intermediate term trend at 95.50 negative. You can see it right there. So that kicked in again, indicating you should be short from 95.50. It's 92.99. It is oversold. Can it go lower? Well, let's look at our our Fibonacci numbers and pull this down to here. Now that's looking good. Okay, we've hit the 50% level. We could go to 91.50. It's a 61.8% pullback. 91.50, remember that number? That would be a natural place for this market to stop, sort of where the support was. If you look, if we just draw a trend line, let me get my tool on here to draw some things. So if you look at these previous highs, just sketch that across here, it takes you right around this level here. So I think that would be a natural place for this market to sort of stabilize and then have a bounce from there. That's what we'd expect. So we are oversold. Remember, we're getting back into the Fibonacci numbers. We've hit the 50%. We may hit the 61.8%, which is 91.50. It's 91.50. Let's see if it gets there. If it gets there, it may be a good place to be a buyer longer term based on our monthly trade triangle. So let's clear the screen, go to our next market. Some good markets right now. Lots of activity, a little bit more reversal of the trends here. Now gold has had a big pullback. Now look at where we've got out of the gold right here at 1653. But what's more important in gold, and I want to show this to you, which is pretty amazing. I saw this, I've been watching it for some time, but I wanted to bring it to your attention today. I'm going to go to the maximum we have on gold. And I'm going to take everything off and just put the, let's take the Donchian trade channels off and the parabolic. So make a pretty simple chart. I'm going to draw a line from this level right here. This is the lows that were taking place in October of, if you remember, 09, when we had a lot of pressure in the market. And let's just draw a trend line. Let's put that off here. And let's just draw a very simple trend line. We told you the power of these trend lines. And look at how this sort of hits perfectly in place. I want to do, let's see, let's try it. That's a better fit. So you see 1, 2, 3, and boom, we went below there. You could even scope that down a little bit there. But nonetheless, this has broken the trend line. This is from a 4-year trend line, so it's very important. So we could come down certainly further than we have done so far. And I think this has been a big surprise to a lot of people who have been bullish on gold. And I think the key thing is here, you can see where our trade triangles basically kicked in. Our monthly kicked in right here at 1672. Remember that? No one believed it at this point in time. And we're almost $100 lower than where we got our first major sell signal. The weekly kicked in at 1653, still in place. And it still looks like it wants to go. Even with today's little bounce, it's going to take some time to repair this market. It's going to take a lot of time. It's not just going to go straight up from here. So a lot of disappointed bulls, a lot of liquidation from hedge funds. I think Paulson, who is a big gold holder in ETFs, I think he's been getting killed in this market. And I think sooner or later, everybody, I don't care how much money you have to realistically assume and assess your position and say, do I want to keep this or do I want to put more money up and stay with a losing trade? My guess is you cut it while you can still cut it. So let's go to our next market. This is the euro dollar. This also has come under pressure, and it looks like it's completed a top. You see our weekly kicked in yesterday at 1.3311. We're 13190. This made a little mini head and shoulder. I'll show you how that works. So remember we talked about this a few times a few weeks ago, or this potential top. So there's the top. That's the formation. So we'll call that 133 up to 136, 137. So if we take 3 or 4 from 133, so we're looking at 130 or 129 is the target level right here. That would be a target level for this market. The 130 level, of course, dovetails very nicely with this low that's back here. But let's just put a little bit of a trend line in and see where that stands. And let's just clear this screen up. Hold on. And let's get a trend line. And hold on, let's just clear the screen. And let me give a trend line in there. So clearly we've broken, you've got all the points there, you've broken below the trend line. This market should be on the defensive, meaning the dollar should be going higher against the euro. So let's scope this up to our next market. This is Apple. Of course, Apple came out today with a slap on the wrist kind of wristwatch, or a iWatch as they're calling it, but it's still under pressure. It's down approximately, about 1% for the day. Really flirting with these lows here at $435. Remember, Apple was up at $700, and people were saying, oh, it's going to go to $1,000. Well, look what happened. Never, when you hear people talking about markets going up to the moon, that's usually the time they turn because everybody has bought in. Now, all you've seen here is liquidation, people getting disappointed. You've seen Einhorn wanted to basically sue Apple for a bigger dividend payout. And that was really trying to just boost, I mean, let's be honest, he's just trying to boost the stock up so he can take some of the markets he's probably bought up at these levels, and he's sitting with some pretty big losses in Apple right here. Or maybe not, but that's generally speaking, when you start doing those things, it's like you're in a position, not in a strong position. So the key thing is with Apple, is it going to stop right at these levels right here? And that's something we have to be very close attention to, the 435 level. That was the lows right here. And see if that holds. But we are oversold. That's the key thing. We're very oversold, like we were here and like we were here. So it doesn't mean to say the market's going to go roaring back up, but I think the Apple iWatch, if it is in fact going to be coming out, they just discovered this patent that was filed last August, August 11th of 2011, and whether or not becomes a product will have to be seen. But they have filed a patent. So let's just do a couple of things here that we want to look at. So let me just clear the screen, and we'll just put a simple trend line in here on Apple, and this should determine what's going to work with this Apple. So if we go from the highs here, just take a very simple trend line and draw it down. So you've got the perfect, that's just picture perfect. You've got all the areas that you want to look at. Oops, you got one here, one here, one here, one there, and basically almost one there. So you've got a lot of tops. You need to go over, this market needs to go over 480 to really get anything going on the upside. And that's obviously about $40 higher than we are right now. If that's going to happen, I don't know, but we'll have to watch it and see how things play out. So let's just clear the screen really quickly and look at a couple of other markets we're looking at today. And one of them is something kind of dear to my heart that I like to look at, and that is a stock called Tesla, named after Nikola Tesla, the brilliant electrical engineer. But they're under a lot of pressure. So you can see them down. They had their earnings come out yesterday. They're still saying they're going to make 20,000 cars in 2013. Whether that's true or not remains to be seen, but they're under a lot of pressure. So you should be, if you're a long-term trader, you should be long from 32.78. It's 34.63 right now. If you're an intermediate term trader, you should be out of this market at 36.86. And I think that's really the whole story of where we are in this market right now. If we just put a line chart on here, which we can do very easily, and we take some of these signals off, get a little more data here. Let's go to maybe a 1-year data. And you can see we're coming back down, that we had this big energy field, we call it. The market cleared up. It's coming back for a pullback. Should it find support here? I think it should, but the market will tell us what it wants to do. So here's what we're looking at really quickly. Here's basically the area that it basically broke out from. You've got an oversold market, huge volume, by the way, in Tesla today, huge volume. So I think around these levels, it should find support. I wouldn't like to see it go under the 33 level. So I think, but give it some room. Give it some room. It's not going to go suddenly. It's not just going to go bingo back up. It's probably going to go a little bit more sideways, regroup like it did here and like it did here. So it needs some energy to build up from. It cannot turn around in one day. So let's just clear the screen and go to our next market. The next market we're looking at is, in fact, what we call old school. And this is Walmart stars. Now, Walmart is actually up today. Their earnings were a little bit better than expected. However, you can see for the past, really since, since November, this market's been going sideways, sort of trapped in a range of between the highs, let's say around 72, and you can see right here, that's 72 right there, and the lows, which are right around here, 68. So it's been trapped in really a $4 range, and we're back up towards the high end of the range. Now, what I do want to share with you is this, and I think this is important to look at. And what it is our monthly trade triangles negative. Our weekly is negative. So if anything, if I had to do anything right now, I'd rather sell this market and probably put a stop over 70, maybe 72.5 on a close-only basis. So that's, I think this market's going to come back down and probably take out the lows. I think Walmart is going to be under tremendous pressure from the online stores, mainly Amazon, and I think they're going to beat Walmart. Walmart was a great invention when it came out in 1962 by Sam Walton. He incorporated in 69, went public in 1972, and it's been a great, great run. However, every company has its day, and I think the day of online stores is over. The type of stores that Mr. Walton perceived it brilliantly back in the 60s and 70s is over. So we'll see how this plays out. But hey, I'm Adam Hewison for Market Club. Thanks so much for stopping by. We'll see you tomorrow, same time, same place. Have a great trading day.